Where does it come from? Do you just print it?
We print it digitally.
Simply flooded the system with money?
Yes, we did. That's another way to think about it.
We're moving on to the Bitcoin standard. The future's bright. The future's bright. The further these things get distorted, the more people realize why they Bitcoin. What's going on, everyone? This is Jordan with Conquer Trading and Investing. If you're new here, welcome. And if you're not, welcome back. We got a strong session ahead of us. We're going to be talking about a lot of things, including about the 2024 halving, the current state of the Bitcoin market. We're going to be taking a look at quantitative tightening, what it means for risk assets. And we're going to do all that here together right now. Starting off, by the way, good morning, good afternoon, good evening. I am so glad that you are here. It is good that you are here. Happy Taco Tuesday to everyone. CTM, we got a lot to talk about later in today's session. Let's begin, though, looking over here at Bitcoin lined up from the halving. We have all three cycles over here, full cycles from halving to halving, starting over here in light blue with the 2012. We have in dark blue the 2016, and in white the current 2020. A lot of people looking at this now and they're wondering, is it possible, is it potential that we saw in November the cycle peak of Bitcoin, $69,000. It happens to be around the same time, if you're counting how many days past the halving, that the 2016 cycle peaked. Did it peak again? And if it did, what does that mean going forward? Right? Listen, let me tell you as it is. Nobody knows. Nobody has a crystal ball. And no one has the answer to that. But we could look at data. We could look at what happened in the past. We could look at what's happening now. And we could put together a pretty clear indication of how things look right now and what we expect. Remember, from the very beginning, CTM, the greatest risk to Bitcoin is the Federal Reserve. Now, it's not the greatest risk right now during this cycle is the Federal Reserve in their policy. Jordan, starting in October, the Fed began, communicating very clearly that they were going to taper purchases down. And you heard it loud and clear. They can't taper a Ponzi. The taper's vapor. Sure enough, not only did they taper purchases and taper purchases fully now, they've begun raising rates. And next they're telegraphing to us that quantitative tightening is coming. What is that going to do to risk assets? We'll look at that in a second. Right now, if you do believe Bitcoin lined up from the halving, how many days passed? A lot of people looking at potential capitulation coming, right? And listen, I'm just going to reiterate one more time. No one knows. Anything's possible. But if you look at what's happened over here over the past year, Bitcoin is running flat, right? If you go back over here to the previous cycle, Bitcoin went parabolic, right? Bitcoin continues to be running flat. More importantly, as it's running flat, we'll look at that in 1 second. Before we go forward, let's move back 1 second, right? Up until this very point over here, up until we're looking at the first week or so in December, at this point, it did look like Bitcoin was doing Bitcoin things and potentially getting ready for a parabolic run. Again, we are always students of the market, students of price. We might have ideas about what we think may or may not happen, but ultimately we have to focus in on what is happening. And once we saw Bitcoin, right, we thought wave one into wave two, and then we were looking for a big move up over here, a parabolic move on Bitcoin. Was it the Fed's policy that put a foot in that? I don't know, but what I do know is that Bitcoin over here at the peak of wave two was coming in for a correction. You're looking at a 20% correction. Everything looked good, well within range. But when we broke down over here, 53,000 CTM, do you remember that Friday? Before the breakdown, we said, if you get this technical breakdown, if you are looking to make any type of move position in your overall portfolio, this is a massive technical breakdown. And Bitcoin, instead of going parabolic and running up, it broke down, but we were there and we were prepared. And a lot more important than what you believe is going to happen is adapting to what is happening. Since then, Bitcoin went sideways. Around this very time, CTM, we began looking at things because that was, again, if you're following traditional 4-year cycle, not supposed to happen. And we began looking at this with different eyes and just wondering, was it possible? Is it potentially possible that even though price made a higher high in November than it did in April 2021, that the top was actually in April? Are we indeed looking at a changing structure as the market of Bitcoin, all the participants continue to grow, $1 trillion asset, instead of just retail and some fund managers, now you're looking at countries, nation states, huge institutions, all adopting Bitcoin. If you remember over here, this was perhaps the top of euphoria. This is when Elon Musk went on to Saturday Night Live to pump Dogecoin. This is when lifelong friends called me up and they're like, Jordan, I just finally got into crypto. Oh, you bought Bitcoin, finally. No, I bought Dogecoin, right? Was that the peak of euphoria? A lot of on-chain and off-chain traditional indicators like the RSI point that potentially this was the top over here. And because of that tight supply held by Bitcoiners, the HODL army, perhaps almost willing price to a new all-time high back in November. And if that is the case, I don't know. I don't pretend to have a crystal ball or anything like that. I definitely don't. But if that were the case, are we potentially getting close over here to putting in a bottom in Bitcoin? Are you working for perhaps potentially over the next, let's call it 3 to 5 months, a potential capitulation event, which may or may not happen, right? Or are we potentially looking at over here, putting in a bottom right now? We have been ever since January, or actually even in December, focusing on the 1 year plus HODL wave, those that have been holding Bitcoin for 1 year or longer. And now you can see that ratio is up to 64%. And what I noticed that happens is that Bitcoin bottoms with a rounding. You see the rounding bottom that occurred here in 2018. Here's the capitulation event that occurred. And Bitcoin, the 1 year HODL was rising. Go back further over here into 2015, the same thing happened. Capitulation event occurred at the bottom, but the rounding bottom had already taken place. And I've been noticing that we've been putting in a rounding bottom over here, thus to me indicating two things: a potential changing structure in Bitcoin's traditional 4-year cycle, and that the bottom is being put in. Are we going to get that capitulation event that has happened in the prior 2 cycles? Maybe, maybe not. I mean, it's a fair assessment to say we did not have a parabolic move. It is therefore potentially possible that the market structure does not need any type of capitulation event in order to kind of reset itself. It didn't have that damage done from any type of euphoric blow off top. It's something you have to think about. More importantly, the tops are always put in when the 1 year, when you see distribution by long-term hodlers into that top. And you could see over here at the peak of 2017, the 1 year HODL ratio falling. The peak of 2013 over here, you could see the 1 year HODL ratio falling. If you think that this top was in April and not November, you do see that distribution happening over there. Again, another piece of potential evidence pointing that perhaps the top was over here, lined up somewhere around April. And since then, we've been running flat, correcting, the structure being repaired. Hodlers are strong. And it looks like to me, you know, that my laser eyes went back on. They went off first week of November after we broke down over there. I took off my laser eyes, right? Put them back on over here recently. It looks like that potentially we are getting ready to break out and put in a bottom. 2024, the halving. Will price not make a new high to 2024? Let's start lined up off the halving over here. By the way, if you are looking at Bitcoin from the previous cycle, the halving occurs over here, right? Price is right over here. This is price 120, we'll call it $127,000. If you believe, let's talk for a second about diminishing returns. If you measure the Bitcoin cycle from halving to halving, which is what the Bitcoin cycle is, from halving to halving, if price is trading above $127,000 in 2024, at that point, are you experiencing diminishing returns on Bitcoin? Right? I mean, it's just data. Looking at the data, price would have to be below $127,000 in order to be seeing diminishing returns from the halving to halving. If it's above, at that point, obviously you're not seeing diminishing returns. It would be weird if you're looking at adoption through an S curve to experience diminishing returns. That would be rather peculiar. I guess time will tell. You could even take it further over here if you look out into this coming year. Once we reach October, right, 2022, the third and fourth quarter, if Bitcoin is trading above $56,000, at that point, it doesn't appear that diminishing returns is a thing. It's just looking at data from a different view, from a different perspective. I know that a lot of people right now are thinking lengthening cycles, diminishing returns. Wait and see. We are looking at a new market. And once we were able to distinguish that perhaps the April was the top, even though price made a higher high in November 2021, that's what helped us, as we've always looked at our log trend lines, not regression lines, trend lines. And we were able to take it a step further and find out that, you know what, this is adoption. This is how S curves work through all asset class, starting with, not starting with, but from trains to the internet, mobile phones, whatever it is, all new technologies. This is the path they have taken, a hype phase of facing reality. And then once that technology has proven itself, it moves on to liftoff. This is a reminder that if you are watching this video right now, you are an early adopter. Not even that, we still haven't made that jump to liftoff. We still haven't made, this is when Bitcoin is super risky. This is when the ultimate market opportunity presents itself. If you are here, if you are hodling, if you are holding strong, if you are part of the army, 64% holding 1 year or longer, the future is bright. The future is bright. All right, let's take a look over here. Boom, 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 boom. Let's take, good morning. Good morning, good evening. Wherever you are in the world, I am so glad that you're here on this Taco Tuesday. Let's talk about this for 1 second, Fabio. Before we move forward, I want to talk about quantitative tightening. I want to talk about how that works, and I want to talk about what that potentially means for risk assets and Bitcoin. Ever since the Bitcoin conference in Miami 2022, a lot of people are talking about that Bitcoin is nothing more than a high beta tech, right? You got people here aligned and they don't even think it through. They just automatically assume. Let me assure you, Bitcoin is Bitcoin, and Bitcoin is going to do Bitcoin things. Remember, high beta tech, ARK investments, that stuff made lower lows. That they took out their January lows in February and they made even lower lows in March. Bitcoin never took out its January lows. Bitcoin in February and in March put in higher lows. If it were a high beta tech, it would have taken out those lows, and it would have taken out those lows substantially. You have to learn to be able to take in all information. You have to then learn to be able to use that ability of critical thinking you have. Think for yourself, work it through. Let's bring this back over here. Let's talk about what potentially, if we see some type of capitulation event, what type of lows we may see. Is it possible that we could move over to our trend lines that have served us well and for so long, right? I'm going to zoom in over here really quick, and I'm focusing on right now. This over here, this is March 2020. This is when we had a dollar liquidity crisis. What does that mean? There weren't enough dollars to go around, right? There was an absolute crisis in the market. That crisis did not start over here. That crisis began in 2019 in September, first showing itself in the repo market. And then when, because of the circumstances that were in 2020, they had to go ahead and lock down the whole world, that then caused a crisis. And in that crisis over here on Bitcoin, what happened, the largest exchange at that particular time was BitMEX. The most volume took place daily on BitMEX, and BitMEX went into a liquidation loop. which happened more than once, but here it happened. And until BitMEX went offline, down for maintenance, as soon as it did, price popped back up. But until that point, price was coming way, way, way down over here. And you could see that we broke down below this trend line, which since September the 15th has held as support, right? And during those particular set of events, that caused us to break down below that trend line. And then we were able to reestablish that same trend line over here in July and in October, right before the breakout of the bull market as support again. And we're getting close to that right now. We're getting close to that right now. And potentially, we are also bottoming out over here. Potentially. We don't know. Is it possible that does not hold and we break down lower? Of course it's possible. Everything's possible. It's the market. If you remember what happened in 2020, oil traded negatively, forward contracts, right? Anything could, crude oil. Anything could happen. It's the market. Is it probable? You know, that's another thing. Look, the way that I view it, if you are here right now looking at Bitcoin from the halving to the halving, and you're saying that, you know what, if, you know, whether or not I still believe that the halving has an effect on Bitcoin, and yes, the halving of the miner's reward in 2024 will have an effect on Bitcoin. By the way, if you're watching this now, go ahead and please smash the like button. Let's get going over here this morning. For sure, there's a set of miners out there who, as they mine Bitcoin, they need to convert that Bitcoin into some other type of currency, perhaps dollars, and that selling pressure has an effect on the market. And when that reward is halved in 2024, it's going to have an effect on the market. However, right here in 2022, a lot of things are different. One of those things that is different is now you have U.S. miners, U.S. public companies mining Bitcoin. Did you see all the sponsors of the Bitcoin conference, right? And they have different incentives. They don't need to sell their Bitcoin. They could actually raise working capital in the public markets and then hold on to that Bitcoin, right? So we are looking, because of things like that, a different changing dynamic and structure in the market itself. All right, what I was trying to get to over here. If you do believe that we're going from halving to halving, price over here, in April is potentially getting close to a zone. Let's call it a zone sometime between September and February, when potentially price could bottom. If I put a box over here really quick, let's do this. Well, it doesn't have to be quick. Here's where we peaked out right over there. And I have this box, right? And if you believe that in this box, there's a good chance that Bitcoin is going to have a capitulation event, you're getting pretty close to it, right? A lot of people think that they will be able to time the market with this great precision. I know that here at CTM, we have a pretty nice history of doing some pretty spectacular things, but I think that it serves everyone better to, let's call it, play it safe. What do I mean by play it safe? Well, if you believe that, we're somewhere around Bitcoin $8,300 and Bitcoin could go down to 32,000, overall, this was the place between 83, 85, and that you should have been accumulating Bitcoin. Here on CTM, it was between $7,000 and $10,000 that we accumulated for over a year, right? You have that same opportunity right now with Bitcoin between $40,000 and $60,000, maybe between $30,000 and $70,000. However you want to look at it, it doesn't matter. If you're trying to wait and time for some type of liquidation event, right, that may or may not come, you might be potentially really damaging your future potential from going ahead and making sure that you thrive, that you are holding strong position correctly. Being short Bitcoin, right? By the way, if you would have sold Bitcoin at the top, and then you were telling me, well, Jordan, I'm waiting for some type of capitulation event and or indication that it's time to get back in the market, that's a lot different. But a lot of people exiting on my call over here, first at the end of the correction of wave 2, they pretend that they sold Bitcoin. They didn't sell their Bitcoin. They're still holding their spot. They might have took profits like we did on any type of leverage trades, but they didn't sell their Bitcoin. There's a big difference over there, right? Executing in real time, very important. This is a time I believe that it's time to turn bullish again. Laser eyes are back on. And whether or not we do have some type of capitulation event or not, make sure that on the turn, you are there when it counts. By the way, for all of 2022, this is, you all know, because it's been repeated almost daily, we're already positioned into Bitcoin. 2022, we are cautiously optimistic at times. Other times we are cautious because of the Fed's policy, looking to build up reserves already positioned strong into Bitcoin. Those reserves, once the Fed pivots, and by the way, we're going to talk about in just a minute when the Fed may potentially be pivoting, how long from now that's going to be, what that means for risk assets such as Bitcoin. Bitcoin is a risk-on asset, no question about it. It will one day be the flight to safety, the safe haven, the risk-off asset, but it will have to be an immensely bigger market than it is today. Right now, it remains for sure a risk-on asset. One big difference, though, is that people learned during the 2020 crisis over here that, you know what, a lot of people needed to sell Bitcoin. Again, this was, I think, a little bit dramatic because of the BitMEX liquidation feedback loop. But a lot of people learned that they don't want to be selling their Bitcoin, that they want to be holding Bitcoin. I know a lot of people out there who have yet been able to accumulate wealth. They believe and think that if they could time it magically, they're going to wind up making more money and be able to get into a position other people who have played it smarter are in. That's not how it works. That's why you haven't yet got to the position you want to be in. It's not because you haven't taken risks that have gotten you there. It's because you haven't yet learned that you need to trade smarter, methodically, and look for those calculated returns. I think next time around, if there's any type of crisis, by the way, the Fed tightening doesn't signal a crisis. High inflation does not signal a crisis, right? Could it end in recession? Of course. Does that mean that the recession ends with a crisis? No, it doesn't. Crises are far and few between. We just had one. It was 2 years ago. And because of that shortage of dollars, that crisis, we now have an ample over excessive amount of dollars. So much, in fact, that the Fed feels comfortable, they could start pulling them away, and they're going to be doing that. All right, let's move on because I don't know where we just went with that, and I want to move forward. Jordan, this is off yesterday's video. Could you please clarify why you say quantitative tightening will put a cap on yields? Since quantitative tightening is basically the Fed selling of treasuries, wouldn't that make yields go even higher, right? And I said, okay, perfect, great question. We'll take a look at that in today's session. Yesterday, I was signaling, right now we're seeing the markets under massive pressure, and that pressure is because yields continue to rise, 10-year, 2.8%. I know that contrarian guy told you they were going down to 1.5. I know that he did, and I know a lot of people bought that up with like honey. That's not what's going on over here. Right? So why would quantitative tightening put a cap in yields? How would that work? There are two ways that quantitative tightening could work. The Fed could go and just sell treasuries on the open market, right? That's one way it could be done. That's what YM is talking about over here. And if the Fed was selling treasuries, by the way, who would buy them? Silent. Who would buy? How could the Fed sell treasuries on the open market if it wanted to? Who would buy them? There would be no buyer. That's not the route they're going to take. How it works over here, quantitative tightening, is when the Fed receives principal repayments from its current treasury holdings, but does not roll them over into newly issued treasuries. That's what's exactly going to happen. They're just going to let them expire. And then the same way that they printed money, the same way that they just, like as Powell said in the beginning of this live stream, they just did it on a keyboard. They're just going to erase them from a keyboard. Instead, the Fed takes the proceeds and simply extinguishes them. The reverse disappear from the banking system with a few keyboard strokes, just as they appeared with a few strokes during QE. This is the route that the Fed will be doing quantitative tightening. Let's take a look at what happened the last time. Let's get that up. Let's take a look at last. Oh, by the way, you could see over here, y'all didn't believe me. Y'all didn't believe the Fed. But here you can see the taper is real. It's now complete. People were talking about as the taper was taking place and the purchases were being decreased, but the Fed's balance sheet was still rising, that the taper is not really happening. Come on, guys. You have to learn to really, come on. What are you talking about? Right? And there it is. And now it is flatlined over here. And what happens next appears to be this, that quantitative tightening, and they're getting ready to start it up. Before we answer that question, let's take a look over here. This is quantitative tightening beginning in 2018. At the top, you're looking at the S&P 500. Is the S&P 500 higher or lower when the Fed ended their quantitative tightening? By the way, over here at this very bottom, you're looking at the Fed's balance sheet. So you see the Fed's balance sheet decreasing, quantitative tightening, all the way to over here. This is where the repo market broke, and they started needing to add liquidity before things really broke, and then the massive expansion of the balance sheet, right? So I want you to focus in on this area, starting with quantitative tightening officially begun. Yes, they started running off some of their, it's not even noticeable, but they started running off a little bit. I think going all the way back to July and August of 2017, and then in December, October, November, December, they started a little bit more, but the official program began in March 2018. And I want you to look over here from where it began to where it ended. And is the S&P 500 higher or lower? It's a little bit higher, but let's call it sideways. It's basically sideways. What about the 10-year yields? Are they higher or lower? Those are lower. All right. Were they rising before then? Yep, they were rising. Not dramatically, though. We didn't have the inflation that we have right now, right? By the way, do y'all remember at this moment over here, because CTM was live every day when the Fed made that massive expansion and everyone was telling you that it was going to be deflationary? We said, no. That's uber asset inflationary. No one called it as well, as quick. We forbid everyone, I say that tongue in cheek, from selling anything at that particular point. Looking over here at Bitcoin. Bitcoin, when QT started, was trading at $7,000. When it ended, it was trading at $10,000. So it was up about 25%. Is QT, right? The question is, how is that going to affect Bitcoin and other risk assets? Won't QT negatively affect crypto? And how does that rate increase and taper lead to parabolic numbers? Well, no one's talking about parabolic numbers in stock and crypto happening right now in 2022. At least I'm not. Not why the Fed's monetary policy is to tighten. Now, going back into October, mid-October, after the Fed released their meeting minutes here at CTM, we said, wow, this could present a problem. However, I still was very highly, let's say, interested in the current 4-year cycle behavior that was taking place. And even though wave 1, wave 2, this is where we realized the Fed is going to tighten, right? At this point over here, I was still looking for this wave 1, wave 2 into liftoff to happen. It wasn't until we saw the technical breakdown at 53,000 that we had to reassess, right? Nevertheless, fast forward over here into what we're looking at. We're not looking for parabolic moves on Bitcoin at this particular moment, not with the Fed looking at continuing to tighten. That tightening we talked about, taper was tightening. We talked about that all the way in November. Raising rates, beginning liftoff, that's tightening. Now, it's debatable how much of an effect that actually has when the real inflation numbers are so drastically high. Or even if you look at the fake inflation numbers, these 25, 50 basis point rate hikes, they're really not really doing much. Now, the high energy prices, that's doing a lot. That's definitely, causing headwinds into the economy and getting it to slow down, right? Doesn't that take liquidity out of the market? Yes, it sure does. There's ample liquidity. There's massive amount of liquidity. Liquidity is not even issued right now, and eventually it will be. It will. There will come a time. Let's take a look at it when things break. By the way, things last time did not break during the whole duration of QT. They did break after the repo market broke, and they broke right after the world went on lockdowns. Then we had a crisis. The last crisis before that was 2008. But what we did have over here was the market. This is when the market basically forced the Fed hand. They forced the Fed to verbally pivot. And when the Fed verbally pivoted, you did see the low be put into Bitcoin. By the way, right over here at this Fed meeting in December 2018, the Fed raised rates. The Fed raised rates. Why did that cause Bitcoin and other risk assets to go up? Well, the market's forward looking. The market knew at that particular time that the Fed had made a mistake and that from there on in, the Fed would not be raising rates. They would be moving towards lowering them. All right. So what about this right now? How long did this take when Fed started QT until the market forced their hand and the verbal Fed pivot to come in? Well, that took approximately, let's call it, 3/4 of a year. This time around, the Fed does not plan on going so slow on their QT because their balance sheet is much greater. Let's say these numbers may or may not be accurate, that last time around the Fed was doing $30 billion a month in runoff, right? They are planning this time of doing somewhere between $60 and $90 billion in runoff. Now, is it possible or potential because of the rise of the Fed's balance sheet that, that's almost all like, it's the same thing? Potentially. I don't have the answer to that. But what I personally believe that there's a good possibility that within the next 3 to 5 months, the Fed is going to be quicker than last time. This was, we'll call it 10 months, 9 or 10 months. I think this time around, as the Fed begins QT, we could be looking at anywhere from 3 to 5 months before the Fed is forced to pivot. When the Fed is forced to pivot, right, and what that looks like, is it going to be something verbal? Is it going to be them actually lowering rates? I don't think so. Is it going to be them starting QE? They may have to, or something worse. We may actually see the U.S. Gov, as genius as they are, say that, you know what, because of these high energy prices, because of what Putin did causing this mess, we need to help everyone out. We're actually going to be sending out stimulus to everyone right before the elections because we want your vote. We want to buy your vote. We're going to send you a $500 debit card that you could use to pay for gas, right? And that again could be some fire stoking those flames of inflation. Anyway, any questions about that? Any questions about the way that we see QT? I'm not so much a why so much as what is guy. All right. And when I say that to you, if you're asking me why technically does it seem that quantitative tightening will put a cap in yields, I don't know. There are people out there who are able to explain and articulate things with these nuances very well. I'm like a guy who's able to point out what is. Is it potentially because that quantitative tightening, that pulling away of liquidity does actually cause a drag on the economy? And is that like forcing the brakes on? And does that then, cause that flight to safety into that bonds? Will that flight to safety into bonds be there this time? Or do people say, you know what? This time around, no, I'm holding gold. I'm holding Bitcoin, and I'm not letting go of my gold, and I'm not letting go of my Bitcoin. I will sell everything else before I sell my Bitcoin, right? And this time around, how much do you think in a pressure situation? This isn't a crisis. This is a correction, right? You understand the difference. People see that the equity markets come off, and they're so used for them going straight up and to the right ever since the Fed kind of had and broke the system over here that they're like, oh, it's the markets are crashing. No, that's a correction, right? This time around, next time around, how much do you think Bitcoin's going to correct? Remember, in 2008, during the crisis, gold corrected 30%. In 2020, during the crisis, gold corrected 15%. During the next crisis, do you think gold's going to correct at all? Or do you think gold's going to go boom and shoot up? What's Bitcoin going to do? Anyway, let's keep going. Any other questions about that? Would love to answer it. We might have some over here. So what I'm going to do over here, it is Tuesday. I'm going to play a little head snack, right? And be careful right now. I'm going to drop this and go over some questions as I do.
Analyzing the charts, hitting projected targets within the margin. Find the flow, sip the matcha, and wait for the waves to come in with lobsters. The kind-hearted Jordan Fosters, working smarter, not harder to move the markers. On his way to conquer, trading and investing, drinking the coffee while reflecting on the blessing. The markets are not crashing. The prices might be slashing just to pretend they're in fashion. Hit the like button, comments, and smash it. Boom, boom, Jordan in the room. Grab the bull by the horns and to the moon. Flow from the plateau, make the play. Boom, boom, it's a taco day. It's a taco day. It's a taco day.
Look at that bull, the bull running. The bull running. Bitcoin's been in a bull market ever since inception. How do you make money in bull markets? Oh, well, I try to sell my Bitcoin and get rid of my Bitcoin so other people could buy my Bitcoin. Thank you, Dan. I appreciate that. Lots of love. I think this comment is so important. I want to highlight this comment over here as we continue. I want to jump back. A lot of people talking about CBDCs, talking about boom, 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 boom. We talked about here on CTM at this particular moment during the crisis that, listen, people kept looking for the markets to then crash again. And we were like, look, the markets just crashed. The Fed's response was so ample, there's not going to be another market crash. As a matter of fact, this is uber asset inflationary. And probably there won't be another crash until the Fed is able to institute central bank digital currencies, the digital dollar. They will probably at that time actually create the crash in order to solve the problem. Here, we will fix everything. Just go ahead and give away all of your freedom and privacy and take our digital tokens, right? But here's the thing. I don't believe that the Fed caused this current situation that we're in. What I think is happening over here is that, the inflation, because of primarily the government, just printing, handing out that stimulus, right? Bypassing the banks directly into people's bank accounts. It is, we're feeling the effects of that. So the Fed is doing what they need to do right now. They're slamming on the brakes. It's going to lead to some type of pivot. When that, you know what's so funny? Here's what's funny, is over the past few months, here at CTM in October, we're like, yep, the Fed said they're going to taper. They're actually tapering. And then most likely, I don't know, but most likely, if they're able to finish the taper, most likely in March, they will start liftoff. I don't know if they actually need to pause before liftoff or even if they need to pivot. And here we got to March. They raise rates. During that whole time, people were saying they can't do it. They won't do it. It can't happen. Then as it happened, everyone's telling you, well, the market's going to crash and the market's crashing, right? Most likely what's going to happen is this is going to lead to some type of pivot that's going to extend the cycle out. And, I guess what I'm trying to get at in a roundabout way, I don't think personally that they're ready to institute those central bank digital currency, the digital dollar, and they're going to need to buy more time before they get to that. That's just my own opinion. But whatever they say, what they could, so listen, this time is different than last time. This is last time, quantitative tightening. We're jumping over to in May as the Fed begins their quantitative tightening. What is drastically different about this time compared to last is that, number one, inflation is a thing. Not only is inflation a thing, we're looking at a massive rearrangement of the order of the world as Russia was, sanctioned to death, basically forced out of the system, their reserves confiscated, their central bank of Russia's reserves confiscated, showing every other country out there that even if you hold dollars, which is supposed to be the reserve currency of the world, they're not yours. They could be taken at any time. So you best protect yourself by diversifying out of the dollar. We were talking about those things beginning to happen over there. A lot of people were not even believers de-dollarization could happening. But we are looking at inflation right now. We're also looking at one thing that's a lot different. We're looking at an enormous amount of liquidity in the markets swishing around. By the way, the Treasury holding on to an enormous amount of money. And they, as the Fed pulls off, as QT begins, they actually could be stimulating the economy. And then you can move over and look at what's going on with China. China is getting ready to ease. And here we are. All right. I want to take a look at some charts with y'all, right? So to do that, we're going to focus over here, starting with price alone. Y'all remember when I put this out over here, this is as price was breaking out and coming towards the top end of the pendant, into the resistance of the pendant. And I said, look, something like this would be the most difficult for most, right? And, we did get the breakout of the pendant, and then you could see what's developing right now. I'm going to talk about that in 1 second, but it's the top resistance of the bear flag. That wasn't for us a thing until we broke down over here. As we broke down the broken resistance of the pendant, right? After you said a retest, it was successful. Never resumed up, making that higher high, and came back down and broke. Once that broke down, that pendant, at that point, then we said, all right, we are looking at our bear flag over here. Not only that, right? After breaking down, let me jump down to the 8-hour time frame with you. Let me jump down to the 8-hour time frame. After breaking down, we came in and retested, right? Here's that resistance of the pendant, that important resistance. That was then, it didn't hold as support. It actually broke down and held as resistance. Price came back down. We had this last trend line in over here connecting the low from February and the low of into March and extending that trend line out, right? Price held there for a second, came in and actually tested for a second time that pendant resistance, right? It was all resistance, 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 broke, held as support once, and then didn't hold that support, tested as resistance once, tested as resistance twice, and then you got the breakdown of the trend line. And then here we are right now. And what is next, right? Well, this is good. This is a continuation of what we were talking about before, Fabio. If we break down further, potentially on the downside, what we could be looking at. And the reason I say that is because, well, from this point on, well, now we're looking at that trend line over here. I want to zoom out 1 second. I want to go like this and zoom in over here right now. And I'm going to come to the close. Do you see over here? I'm going to just clone this line, this trend line for 1 second with you. And I want to show you on a closing basis where we kind of so far this morning have come into. All right, so I'm just going to go like this, right? So that's a direct clone, but we're not getting any type of, let's say, price touches of that. It's not being respected. I'm going to experiment a little. I'm going to draw it up, obviously touching where we meet over here. And do we potentially find support where we are this morning? I mean, maybe not. I don't know. But that it seems like, why I should be aware of that. I should have that line in there. Watching it, we will see. This line over here, at that point, we've spiked into it twice. Sellers were never able to capitalize. If we break below that area of support, this is what people might call, and rightfully so, the support of a bear flag. Here's that bear flag top resistance now. I said once we broke out of the pendant took precedent. Once it trumped the bear flag. And then we said before it all happened, unless that broke down. Once we broke down between 43,600, at that point, it appears to me that the bear flag is definitely in play. You can see it playing out right now. If we break down out from the bear flag, that could be bad news bears, right? And that could lead to what? First, a retest of this line over here at $35,000. That is the channel we've been over here, connecting the April to the November high, cloning it, pushing it down over here. You can see that the June low, the July low, the January low, they've all touched that area. Breaking down from that area, that would be a capitulation event taking place before us. Of course, at that particular time, you would hear a lot of people talking about Bitcoin is going to $9,000, et cetera, going to zero, perhaps. I have no idea where it would be going or anything like that. I'm not trying to put a floor into potentially what the floor of Bitcoin could be. It is fair to say, if you look at a weekly chart of Bitcoin, if you look at the 200-day moving average, that Bitcoin on a monthly basis has never closed below it. That's somewhere around right now, let's call it $20,000, $21,000, probably somewhere around the low. By the way, you can see that cloned line, this cloned line over here, this then cloned down to over here. If you clone it one more time, this put it down off of that March capitulation low in 2020, right? That's also coming in right around that area. That's a rough stroke over there, but that's somewhere around that $20,000 area. I imagine that somewhere around there, if that happened, would be somewhere around the low. I imagine it would be very, very quick, right? You remember over here when we're looking at boom, 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 boom. I imagine it would be very quick anytime we get to an upper or lower extreme. You know, why they're always in play, price historically does not stay long at either of these ranges. Nevertheless, I'm not going to base my strategy around that potentially we may have a capitulation event, right? Because why? Well, as you've seen before, when Bitcoin put its low in January over here, and then just last week when Bitcoin is trading up, right, $47,000, I don't know what that is right there. Let's stay with me. Let's move over to here. Let's go like this to this. You're talking about 44% off the low. When are you turning bullish? Do you know how much money you're losing out, X amount of years from now, not positioning higher, not lower? Anyway, we're going to get into some CTM 2.0 stuff right now. Everyone that has joined us for this session, thanks for being here. If you have not yet subscribed, make sure you do go ahead and subscribe to the channel, hit that bell icon, and be ready for more. If you have any thoughts to add that you would like us to perhaps look at in tomorrow's session, leave those questions in the comments below. All right.